Break and retest trading is an excellent technique to profit from the next big move in a moving market. I personally use one major break and retest pattern. So my goal for this video is to actually educate you about it, how to recognize it, and how to set your stops and targets while using this breakout strategy. We have all been in a position where we are watching price trade in a narrow range and waiting for a breakout from that range. And our perfectly rational argument is that because price normally breaks out of a tight range with a big move in one way or the other, we might earn a fortune by jumping on board that move early. When this occurs, price tends to run away from us like a speeding bullet, bursting over the range boundaries and disappearing like a meteor. We look at all those pips mounting up and we think, I have missed a great move again. But the Forex breakout strategy you're about to learn is my personal favorite. The strategy has been responsible for some of the largest gains in my trading journey. In this video, you will learn how to identify the setup, when to enter the market, as well as how to identify possible targets. We will also take a look at the several examples on the 1 hour chart as well as on the 4 hour or also on 45 minutes as well, because I have found these 3 time frames to work the best when trading this breakout strategy. So this Forex breakout strategy has 4 parts, which is support, resistance, breakout, and retest. The retest of a former support or resistance provides you as a trader with the opportunity to enter the market. So let's define the word breakout before we go into my favorite Forex breakout strategy. So breakout is any price movement that occurs outside of predefined support or resistance zone. And depending on the price action pattern, the breakout might occur at the horizontal or diagonal level. So for example, if market begins to move sideways for more than 3 or 4 periods following a breakout, there is a good chance that the market won't produce a retest of a former support and resistance. So that's why higher time frame analysis is very important for any trader, because it helps to see a wider picture of the market. Let's look at the 2 examples of one of the most common breakout patterns seen in a Forex market. So the first example shows a bullish breakout pattern. We have a market that is trending up but has found resistance at the horizontal level, and after a few unsuccessful attempts, the market finally breaks through the resistance, and that signals a bullish breakout from a key resistance level towards an upside. Moving on to the next example, we have a bearish breakout. Is identical to the bullish breakout except that the market breaks to the downside this time. So take a look at this example. The market eventually breaks through the support after several failed attempts. We can see multiple rejections on the trend line, making lower lows and lower highs. So this indicates a bearish breakout from a key support level towards a downside. In this scenario, we had a retest with a closed bearish engulfing candle. So in my opinion, breakouts are important trading strategies because they frequently signal the beginning of a higher volatility. So we may take advantage of this volatility by waiting for a breakout of a key level and then by entering into the new trend as it develops. Talking about additional tools to perform this strategy, you can add any of your most favorite tools, but trading for me would be less challenging if I wouldn't have had my favorite and well-tested indicators, which are moving averages of periods 25 and 50. Again, it's absolutely optional if you wish to add these indicators, but I think they go along well with this strategy. So to get a sense of how the strategy works, let's go through each stage, including the entry technique and where to position your stop loss. So it is ideal to enter on a retest or previous support or resistance depending on which direction the market breaks. I strongly recommend you to wait for a close outside of the level to confirm the breakout, and ideally to have a bullish engulfing candle or bearish engulfing candle if you go short. Your stop loss should be placed above or below the breakout candle at minimum, so you will have some room for the trade to move. So now that we know where to enter and where to place our stop loss, let's discuss how to set a target. As you may well know, I'm a huge fan of using simple price action levels, so you can probably guess how we will go about setting a profit target. Of course, you can use the previous area of sensitivity, support, or resistance depending if you go short or long. Again, using indicators to plot stop loss, take profit can be really useful when it comes to this strategy. All you have to do is just to take a look at the past price movements, to see how it performed, and then mark those horizontal areas of a sensitivity. So I just quickly wanted to show you buy and sell examples using this breakout strategy before I will show my own live trading results using this approach. So on your left, we do have Euro AUD, and that's 2 hourly chart. We do have our support, resistance, and we have the mid horizontal area of a sensitivity. So what actually happened over here, I used my moving averages of 25 and 50. We can definitely see that this bullish engulfing candle bounced of it and break the resistance zone. What happens next is we have a retest again on our previous area of a resistance, closed bullish engulfing candle, and the trade actually went nicely by reaching more than 100 pips in profit. So again, as you can see, if you would catch a nice moment using this breakout strategy, you can definitely gain a huge amount of profit. And if you will take a look on your right, we have NZD/JPY, and that's on 4-hour chart. Again, we do have our support and resistance levels, and we also have our trend towards a downside that has been rejected multiple times. So what actually happens next? The selling power actually broke our support zone, but in this scenario it didn't actually retested our previous area of sensitivity as such as did in this buying example, but it still managed to reach more than 140 pips into the profit. The moving averages also made a crossover, so that's a good indication to go short. So here you go, guys, this is my trades that I placed using the breakout strategy. I have NZD USD, that's 1-hour chart. We can see that 2-hour chart is currently doing a bearish engulfing candle, so hopefully it's gonna close like that and it will continue to move further down. And now my live trading account is $246 into the profit, which I'm super happy about. Again, I do have a AUD USD and it's currently moving towards a downside as well, so hopefully it's gonna do it like that. The 1-hour chart had a recent bearish engulfing candle. That's what I do want to see when using this breakout strategy. So $263 into the profit, which is not that bad. And NZD USD, look at it, it's just been doing so good, nearly 40 pips into the profit by using the simple steps and super simple strategy. Nearly $300 into the profit. I'm super happy because, I mean, why not to give the simple steps and simple strategy a go if you can earn so much? I hope this video opened your eyes to what's possible using the breakout strategy, and if you did enjoy this video, I think you will love this one as well.